Welcome to a special episode of Stock Shots. Not only do we have a great interview with real estate expert, author, and entrepreneur Dr. Danielle Babb, we also are announcing the launch of our new website, www.stockshots.tv. That's www.stockshotz.tv.
We're here tonight with real estate expert, author, and entrepreneur, Dr. Danielle Babb. Dr. Babb, thank you so much for taking time out of your schedule to be with us here on Stock Shots tonight.
Oh, it's my pleasure. Thank you.
Dr. Babb, I want to talk to you about real estate tonight, but before we do that, I'd like to talk about your newest venture, teachonlinetraining.com.
Yeah, teachonlinetraining.com is basically a brand new company launched last week to teach online teachers how to get jobs, how to maintain their workload, and how to teach both high school and university. So it's actually the first company that's going to teach how to do both. There are a lot of people that are just tired of paying astronomical gas prices, and they're tired of long commutes. They want a 2-second commute from their home office to their bedroom, and quite honestly, I don't blame them. So there's a lot of opportunity there, and we're excited about the venture.
Well, one of the things that I see in it, and I actually had another interview today that was discussing the high cost of higher education. This could offer some education to those that couldn't otherwise afford a regular 4-year on-campus college degree, could it not?
Oh, you're so right. Right now, we know that 80% of university students are taking at least one course online. And we also know that the average online learner, where they're purely online, the median age is over the age of 37. And most of them either have families and or full-time careers, and they wouldn't have any other opportunity. I earned my doctorate online, and I was traveling 3.5 weeks out of the month. And honestly, if it were not for online programs, I would not have been able to earn my terminal degree.
Yeah, I think this is the wave of the future. And I think this is something, and I'll ask you to talk a little bit later about our economy in general, but I think this is something that our country desperately needs, because we need to broaden the base of people that can get the higher quality jobs in this country.
Mm-hmm. You're so right, and allow people who, whose jobs they're finding their jobs being sent overseas. It allows them to have retraining and job training, and you don't even have to earn your degree online. Let's say you want to, change trades. You can go to trade school online and be doing this while you're still in your full-time job and have a plan for the future. Not to mention the fact that, today's average Gen Xer will have 4 to 5 careers in their lifetime, and to prepare for those careers, what better way than education?
Absolutely, and again, I think the key component of this is being able to continue that full-time job and still get the education.
Yeah, and and still get the camaraderie. One thing I hear a lot from online learners that are contemplating online education is, well, what's it going to be like? I have an alumni association with USC, and I have my colleagues I went through school with, and we're buddies, and they don't think they're going to have that same interaction online. And we have found the opposite to be true. We have so many forums, we have so many community-based systems now for online learners that many of them are very, very well networked. They still meet at residencies if they either choose that program or they'd like to, and that face-to-face time is there just in a virtual world.
Which is the wave of the future. I know that it oftentimes is embarrassing to me how much more my 12-year-old knows about computers than I do.
I think many of us are in that boat. I think my nephew learned at 3 how to use a mouse. So
That's right. All right, let's shift gears a little bit and talk about the real estate market, and let me ask the million-dollar question right out of the gate. Are we in the bottoming process of the housing market?
Oh, the bottom call question. I heard recently, I was doing a show on Fox, and one of my the colleagues I was debating said we're in the 3rd inning of the ninth inning, and I disagree with him. I think we're a little further along than that. Whether we're at the bottom is going to depend on which area you're living in. We are starting to see prices rebound in some areas and stabilize in some areas. And those places, for example, are Las Vegas and Southern California, in many areas of Southern California. But there are some cities that have a ways to go. Unfortunately, I think the Detroit area, the Cleveland and Columbus areas, and South Florida have not yet even begun to see what's going to happen because of the 2009 reset. I would say we're maybe halfway through in those areas, but some states and the Midwest where we actually saw a price increase last year that isn't widely publicized in the media, those areas I think are doing just fine and have seen the light at the end of the tunnel, and it was not an oncoming train. So I think we're in good shape in some places.
I saw another interview that you did, and you made the statement that the markets that were most likely to rebound quickly were those that would be appealing to the retiring baby boomers. Do you have a market that you really see as being the top based on that type play?
I do. I think that the Fort Myers area, although a lot of people in Fort Myers disagree with me, Fort Myers, Palm Beach, Florida, I think that Las Vegas, Nevada, where not only do we see boomers moving there, but we also see an incredible amount of jobs being created, 10+% each year, despite the declining jobs the last 3 months. So those are the areas that I like. Now, one thing that's very interesting is when we look at the boomer population, we know that from the time that the boomers are working to the time that they retire, the top 5 states they live in doesn't change, except with the exception of moving to Washington State. So they're moving away from Colorado and going to Washington State. But all the other states stay the same, and those states are Florida, Nevada, Arizona, California, all the warm states. So if you want to be ahead of the game, start investing in Washington. That's my opinion.
Okay. One of the things that we've tried to do with our show is when we publicize a guest ahead of time, we have a question. And one of the questions that we got submitted online for you is, in the rural markets, particularly in the South, this came from a gentleman from the South, do you see now the time for a small investor to buy that first piece of rental property, or is that a risky investment at this point?
Well, I think it depends on which particular city in the South. I'll give you an example. If you're trying to buy in Miami, I don't think it's a good time. If you want to buy in Ohio, I don't think it's a good time. If you want to buy in maybe Oklahoma City, or you want to buy in Austin, Texas, one of my favorites, or you want to buy in Louisiana, for example, I think that you can see some outstanding prices. You might see some small declines, unless something drastic that none of us expect happens. You might see some small declines, but over the long term, that 10 to 20-year hold period that most of us investors who rent out our property are looking for, I think you're going to see fantastic gains. Now, the question, of course, always comes up, well, where's my money better placed? The stock market with its potential yearly gain, especially with dividend stocks, or real estate. And what a lot of people don't realize is that the costs associated with real estate are tax deductible, particularly if you have a real estate company that you're running your property management through. So the gentleman that asked the question, he's going to have to weigh all of those factors and determine what sort of cost advantages this real estate investment would have for him as well, because even if the market goes down a little from here, those tax advantages may offset that loss.
Absolutely. One of the things that I heard you say on Cavuto, I think it was a couple of weeks ago, was that you've talked to several of the banks, and the banks have money to lend. The problem is the packaging of those loans and the liquidity of the people out there to buy those loans is just not there. If we see further government intervention with the way, trying to regulate the way these loans are packaged and sold, will that have a big impact on the real estate market?
I don't think it's going to. I don't think government can get us out of this. That's just my personal opinion. I think that having Fannie and Freddie buy loans basically create a higher value for conventional loans. Helps a lot of people on both coasts and in Florida buy homes. That's basically when the banks can offer a better rate because they know that they can sell the loan to Fannie and Freddie, the government-backed agencies. If those types of increases, I think, changing the conventional amount, for example, and dropping interest rates certainly could have an impact and will continue to have an impact. The problem, though, I've been seeing recently, which really was surprising to me, is even though the amount of conventional financing was changed, banks are still kind of leery that the government will actually buy those mortgage-backed securities, and so they're still acting as though the limit is in the 200,000, even though it's officially been changed.
For the rest of my interview with Dr. Danielle Babb, please go to www.stockshotz.tv. That's www.stockshotz.tv. Thank you for listening.